After some rest over the weekend, it's time to start up a new week and do business. Welcome. This is the best place to start it. We're having 55 minutes of current and relevant business conversations right here on Business Morning. I'm Imi John Mekwa, and we'll get right into it this Monday morning, beginning with global oil prices. Well, prices ticked higher on Monday after China took steps to support its flagging economy, though investors remain worried about the pace of growth as well as further U.S. interest rate hikes that could dampen fuel demand. Brent crude rose 19 cents to $84.67 a barrel, while U.S. West Texas Intermediate crude was at $80.09 a barrel, and that's up 26 cents. Brent and WTI posted a second week of losses on Friday after Fed Chair Jerome Powell said that the U.S. Central Bank may need to raise rates further to cool still too high inflation. Oil benefited from a better tone on the opening IG market, and after China have a stamp duty on stock trading effective today in the latest attempt to boost struggling markets. In the United States, energy firms cut the number of active oil rigs for a 9th month in August, and that's according to Banker Hughes. And also, tropical storm Idalia has formed the Caribbean and could strengthen into a hurricane and hit Florida. Edible oil now, Malaysian palm oil futures dipped following reports on lackluster exports this month, although gains in competing edible oils limited the downward trend. The benchmark palm oil contract for November delivery on the Boston Malaysia derivatives dropped 6 ringgit to 3,956 ringgit. That's about $850 per metric ton in early trade. Exports of Malaysian palm oil products during August the 1st to 25th were seen falling between 4.3% and 7.8% from July the 1st to the 25th period. Independent inspection company AMSPEC, Agri Malaysia, and Cargo Surveyor found this out. They also say that Indonesia's palm oil exports, including refined products, in June stood at 3.45 million tons, while the stock by the end of June was at 3.69 million tons, according to data from Indonesia Palm Oil Association. Dalian's most active soy oil contracts rose 1.4%, while its palm oil contract also climbed 1.4%. Soy oil prices on the Chicago Board of Trade advanced 0.5%. Grains now, Chicago's soybeans rose 1.5% on Monday to a one-month high, while corn gained ground after a U.S. farm survey found that hot and dry weather conditions stressed both crops, which could result in smaller harvests than the government had predicted. Wheat also rose amid concerns over global grain supplies. The most active soybean contract on the Chicago Board of Trade was up 1.4% at $14.06 for 3/4 of a bushel. Corn rose 1% to $4.93 for a bushel, and wheat gained 0.4% at $6.24 for a quarter of a bushel. Soybeans climbed to $14.10 a bushel earlier in the session. That's the highest since July 27. Prices are up nearly 10% from a low on the 8th of August. There are forecasts of more hot and dry weather in the United States Midwest, which could further reduce production. Soybeans are in a crucial stage of development and susceptible to damage from extreme temperatures. U.S. 2023 soybean production could total 4.11 billion bushels, according to what farmers have found. We come to Nigeria now, where over the weekend, the new Minister of Power, Mr. Adebayo Adelabu, has assured Nigerians that the federal government will empower them through stable and accessible power. Mr. Adelabu promised Nigerians that they will start witnessing improved electricity supply between 6 months and 1 year. And this promise, I know Nigerians will remember today. This is August 2023. In 6 months from now, we expect to start seeing some changes according to what the Minister of Power is projecting.
We have suffered for so long with poor power supply. And I can tell you that this sector is the most criticized sector. So we have to be very, very careful the steps we are going to be taking. and how we are going to revive this sector. I want to use this opportunity to allay the fears of our people and let them know that the turnaround that we're looking for all this while in the power sector is here. Inshallah, we'll do everything possible to make sure that we laid a very good foundation for stable power supply, 24/7 uninterrupted power supply in Nigeria. We know it's not something you achieve overnight, but once the foundation is laid, others can also build on it. And I can tell you that in the next 3-6 months to 1 year, we'll start seeing improvements in this sector. The president that gave us this assignment has shown that he has confidence in us. They should pray for us. They should not curse the operators of the power sector again, because there is power in the tongue. They should believe that we can do it. And I'm promising that I will put in everything within me to make sure that this sector works. Let us forget the fact that some people have been posted there and they have not really succeeded as expected. This is a new era, and I'm telling you that I will put in everything that God has given me to ensure that we have stable power supply in Nigeria.
All right, so 6 months from now, latest August 2024, we expect to have improved power supply according to the promise of the Minister of Power right there, Mr. Adilabu. Well, the story of Nigeria has different faces. Of course, power is a major driver, Nigeria's economy. And we recorded a modest growth of 2.51%, talking about the GDP. I'm sure by now the number is everywhere. Second quarter of 2023. At the National Bureau of Statistics. Last week, they were really busy. Remember that employment, we had the Statistician General speak with us on Friday about the employment data. And later on, they did release the GDP later on Friday. And we saw a little bit of growth there. But analysts are telling us not to get too excited. One of those economists that have told us to manage our excitement is Dr. Muda Yusuf. You know him. He's the Chief Executive Officer for the Promotion of Private Enterprise. And he joins us here in the studio. Good to have you, Dr. Yusuf. Good morning.
Thank you, Eni. Good morning.
So, the general projection for this year is about 3%. Does it look like we're going there? We're already in August now. This is for the second quarter.
Well, the figures so far are not too bad, given the context in which the economy had operated. First, we had the challenges of the elections, the distractions, the uncertainty that came with the elections in the first quarter, and also to some extent even in the second quarter. Then following the reforms that we had some very significant shocks on the economy. So if in spite of all of that, we posted a growth rate of 2.51%, I think it's not bad. Mm-hmm. It's slightly better, I think about 20 basis points better than what we had in the first quarter of this year. Mm. So it's still generally okay. Mm. The average for sub-Saharan Africa is about 3.1. And what we are seeing even in the advanced economies is even much less. Mm. The forecast for US is about 1.8. The forecast for the Eurozone is about...
That makes it look like we're doing better than the United States.
Well, because we are developing, we still have a lot of room to develop.
For growth.
These are mature economies, so that is why it looks like that. But given the challenges that we have gone through, and yet we are not yet in a negative zone in terms of growth, I think it's still not bad.
Yeah, but that also raises the question. On Friday, we're talking about the employment data. I know you've seen it, that unemployment now is 4.1%. And because the NBS has adopted the new methodology for measuring data, because it's a global practice. And people ask how real do they really reflect these numbers, this data that the NBS releases? Do they really reflect the reality, our reality? I guess this also, you tell the man on the street, oh, the economy grew 2.51%. I'm like, so what's my business? Mm-hmm. Where does it concern me? How do I feel it? So again, the connection of data and the reality.
Yes,
is
it is
here.
important. That is why in economics we talk about a growth that is inclusive. You see, otherwise some of these figures will just sound academic, just as you have said, just as you have with the unemployment data. Those figures may sound academic if there is no impact, but you need the growth and all of these figures as the basic foundation, upon which you can now build some other things that will, improve the economy. Because there's a relationship between the GDP performance and also investment. There's a relationship between investment and employment. There's a relation between employment and poverty reduction and all of that. But having said all of that, it is one thing to have the economy performing. It is also another thing to specifically address the social issues, the welfare concerns, So you can be having an economy that is growing, and you can also be having at the same time people getting poorer. That is not the kind of economy we like to see. So that is why it is important to underscore the importance of inclusiveness in the growth of an economy.
Okay.
So that is very important.
All right. So let's look at the GDP growth in details, because I think you are one of those who has told us, even though we have seen a growth, we should not be so happy. We see sectors like the quarry and minerals. We see them grow. I guess Mr. Lake would just have to build on this. The Minister of Solid Minerals, we saw it up about 39%. That's huge. But how much of that goes into the official pocket, the government pocket?
Well, that is one issue about the solid mineral sector. But the good thing now is that there's a whole lot of interest in that sector, given what is happening, especially around these electric vehicles, batteries, and so on.
And we have a lot of those raw materials.
We have a lot of them in Nigeria. So there's a whole lot of interest in that sector now, in addition to this quarry, which is related in a way to the construction industry as well. So the two together is showing a whole lot of promise from what the figures have shown. But again, I take the point, there's a whole lot of illegal mining, artisanal mining as they call it. Some of these things are not being properly captured, and I've seen that there's a whole lot of efforts, to mainstream these artisanal miners into the mainstream of the mining sector, and also into the mainstream of the, the formal economy. Some states are taking steps, and even I remember at the time of, Fayemi, Governor Fayemi, when he was the Minister of Solid Minerals, he took some deliberate steps, to bring in this illegal miners.
I know they talked a lot about mapping at that time, finding out what is where, but I didn't really get the result of it.
No, they have done a lot. It's geological mapping, and that is to support investors. Because for you to begin to invest in mining and begin to commit resources to particular locations, you must have some geological information. So that is the support that the government is bringing to that sector.
So can we say as a result of that, is that attempt or that effort, the mapping and all of that attention, is that why we see this?
No, it's a combination of both. It's a combination of the increasing global opportunities for solid minerals. It's expanding because of all this energy transition thing. So the demand for some of these minerals are growing. And that, of course, is also complemented by the efforts of governments to improve geological information as to what is where, in what quantities, and so on. Because you need that to minimize the risk of investment. Because it's a very highly risky sector.
Yes, it is.
And it's also
it's highly undeveloped.
It's undeveloped.
In our part of the world.
And it's capital intensive as well. So there's a whole lot that needs to be done.
Well, I have a worry. I mean, we see growth in manufacturing, we see in food and beverages and agriculture, but the growth are so minimal. I mean, for instance, manufacturing is just 2.2%, food and beverages 4%, agriculture 1.5%. And these are areas that, we have a lot of potentials that have not yet been tapped.
Yes, the thing is that the headwinds are enormous. particularly when you look at the real sector of the economy. When you look at manufacturing now, I mean, you can imagine, I mean, you have stories of, companies that have left and so on, and they are still grappling with a whole lot of issues. A whole lot of legacy issues around infrastructure, power, financing, FX, the ports. Those problems are still there. Unfortunately, we have an industrial sector that is also highly import dependent. That makes it even worse. It makes them a lot more vulnerable, to external shocks, particularly to the foreign exchange shocks. Because if we talk to them, the two biggest issues facing Nigerian manufacturing is foreign exchange and energy.
Yeah, we saw the Minister of Power there. He was in Oyo State promising that within 6 months and 1 year, Nigerians will see an improved. And I know a lot of Nigerians will be like, we've heard this so many times.
We've heard this.
We cannot put our hope on this. I don't know what he would do differently to convince Nigerians.
No. I mean, we have heard that kind of story several times over. So we cannot depend on that. I think we should relate a lot more to what is done and how we see the outcomes. It is the outcomes that matter. We have gone past through the era of campaigns or telling us about what you want to do.
You don't think we can be patient for 6 months and see perhaps Mr. Adilabu is different?
No, 6 months is a short time. When you are talking about fixing power, if you can really achieve results, that would be great.
Yeah, and now there are more avenues. You have the transition, clean energy now more on the table. People are looking at the alternative, not just waiting for, the one that comes from the national grid. We have a new law guiding power supply and generation. States now have. So there are more opportunities now that should make it easier.
Yes, it's good for the diversification within the sector. It's good for the decentralization of the power sector. It's also good for, private sector investment. But what we are yet to see are government policies to drive it. It is not enough to put the law on the table that, okay, it's now diversified, it's now decentralized. What fiscal policies have we put in place? What incentives have you announced to encourage more people to go into renewables, into all this embedded power and all of that? We are yet to see that. I'm hoping that the Taiwo Daily Committee will come with it, because there's a whole lot that can happen with fiscal incentives to drive investment. You can achieve a whole lot of results. That will even give you more results than all these palliatives and all these intervention funds. If the tariffs, incentives are very good for those who want to invest in the power sector, that would be great. If monetary policy concessions are also good for those who are in the power sector, that would be great. If tax policies, tax incentives are announced, that over if you are going to power sector investment, if you are going to refinery and all of this, these are the tax incentives we are rolling out. These are the tariff incentives we are rolling out. We are yet to see that. And these are low-hanging fruits as far as driving the recovery of the economy is concerned. So the government needs to work a lot and very quickly too on that side. These are some of the things I'm expecting from Mr. Oyedele. From Oyedele.
He's been a guest many times. He's been expanding and talking about this, so we expect it to come into action now.
It's not just about chasing revenue. It's also about using those policies to give incentives to the private sector to be up and running in those sectors.
All right, still looking at the GDP numbers now, the sectors that contracted. A painful one, of course, would be the road transport. I guess that has a whole lot to do with the subsidy removal.
Yes.
Even, a lot of times when I was coming to work, I noticed that the road is not as busy as it used to be. So I guess this is just the reality. More than 50%.
Yes. Well, that, I think, is the biggest contraction that we saw.
And this translates to economic activities, not just people walking around or driving around.
Of course. The road transport economy is a very huge economy. It's not just about those who are driving. It's not just about those who are in commercial transportation. It's also about those who are feeding the sector. Look at the artisans, for instance. I was speaking to a organizer the other day. He said that the patronage has dropped. I said, why? He said, not many cars are on the road anymore. So you don't have tire punctures and all of that. It's affected even at that level. The same thing with all these mechanics, the wires and all of that. Even those who are in the petroleum downstream, their margin may have improved, but their turnover has dropped because the sales of fuel has also dropped. So there's a whole lot of economy around road transportation, you know, and all of this is affecting a whole lot of them. So it's not surprising that we had that kind of very serious drop in...
coal mining also down 15%.
Yes.
Motor vehicle assembly, I don't think we've been that good at that.
We have not been that good, but, you know, there was a time, at least some of the government agencies had a policy, even the government itself had a policy of patronage of some of these vehicles that are locally produced. But again, the challenge with that sector is that it's also heavily import-dependent.
Like everything is imported.
Everything is imported.
Yeah.
I mean, the beauty of manufacturing is for us to be able to localize a lot of the inputs that we use. That way, you bring down costs, you reduce import dependence, and you're also able to generate a lot of multiplier effects for the economy. So I'm hoping that we'll go very quickly in that direction.
The music and motion pictures, when I saw that's contracted, that
Yes.
could be worrying because that's one of our strengths at this time.
Yeah, a very slight contraction though. But again, you know, when the economy is going through the kind of things we are going through, particularly in the first quarter and the second quarter, it affects practically every sector, you know, because this is about entertainment and all of that. But when people are struggling to feed, when they are struggling to pay school fees, when they are struggling
to buy petrol,
some of those things get relegated in terms of demand. And quite a number of products have been affected. Because it's after you have eaten, you have paid school fees, that is when you remember some other sectors. So many sectors have been affected because of the declining purchasing power and the weak disposable income. As a result of, you know, reordering of spending priorities that the citizens are taking now.
I think every home has had to do that.
Of course. It's a very challenging period. It's a very challenging
But the most scary one is our backbone in the country, where the sectors in recession, we have oil refining down 35.6, crude, petroleum and gas down 13. And of course, we have the livestock and textile, but I mean the oil part.
The oil part is very disturbing. But the good news is that the government is taking the issues in that sector very seriously.
So a lot of drama, I think, from a Friday over the weekend around.
Yes, the whole apparatus of security. I saw them going to the Niger Delta, visiting all the state governments and all of that. I think the government is committed to ensuring that there is security in that space. We have made some progress in the policy area, especially with the Petroleum Industry Act. But we need to secure the place. We need to ensure that the place inspires enough confidence for investors to go there. And we need to reduce the criminality and the impunity, you know, that has characterized the sector over time. Yeah, so if we're able to do that, I think we'll be getting somewhere.
We're talking about impunity. There are a lot of fingers point to, you know, the other one that they saw with the Navy, that there was a Navy also involved. And, you know, a lot of stories that we cannot really prove. But, I mean, when you ask the question, a vessel as big as it is, how can it be on the waters? And the regulators, Navy and all of that cannot see it, or do not question its destination, its papers, and all of that, you know, raises a whole lot of concerns that perhaps we should look inside us if we really want to solve this issue of oil theft.
Exactly, and that is what the government needs to do. There's a lot of, connivance among the security agencies. I remember the GMD of NNPC at that time also said that. He said that much. There are quite a number of people, even within the security agencies, and even within the NNPC, were also involved in it. So I think we need the political will, you know, to make that difference, you know, to bring sanity into that sector. That is very important.
And we really need it because
that is a life wire. Really.
Yes, and it's the lowest hanging fruit at this time before we go to non-oil export, production, manufacturing. I mean, it's what we can really bank on at
Exactly.
this
That
time.
is what has helped the Middle East countries. They leverage on that, to build their infrastructure, to build industry, to build the aviation sector. The key lever was the oil and gas. And these days, there's a whole lot of opportunities. I mean, look at the oil price, look at the high demand for gas and all of that. So for me, I agree with you. These are low-hanging fruits, which we should move quickly to take advantage of. If we're able to do that, we'll be able to, bring some stability even to the macroeconomic environment. All these FX issues, fiscal issues, and all of that, we'll be able to have a very significant positive impact on them.
All right, we have to stop there for now. Thank you so much, Dr. Muda Yusuf, Chief Executive Officer of the Center for the Promotion of Private Enterprises.
It's a pleasure. Thank you very much.
Thank you for always being available whenever we need you. We appreciate that. All right, now we'll take a break. But the GDP report highlighted one sector that perhaps you've forgotten was still bringing in money into the economy, the coal mining. It contracted, however, 15.7. One state that we know benefits from coal mining is Enugu State. So our reporter right there went to some of those areas in the state and sent in this report on coal mining in Enugu State.
At the beginning of the 20th century, the Southern Nigeria Protectorate was established by the colonial administration of the British Empire. 9 years later, coal was discovered by the colonists, which led to the creation of what was then known as the Enugu Coal Camp. The exploration of coal began and the mining opportunities attracted people around the region. This was the beginning of one of the first urban settlements of what is today known as Enugu. However, the discovery of oil distracted the government from the exploration and exploitation of coal till date. Even the miners' strike statue at the New Market roundabout. The Eva main mine, which was some of the major relics of mining in the state, have been destroyed by government and vandals. Those who witnessed the coal economy recount the steady power supply at the time and are quite unhappy at the lip service paid by successive governments to revive the coal industry.
It is sad, indeed, because the coal harvested in Enugu was used in powering the Oji power station, which was supplying electricity to the whole eastern region. Then, I agree quite right that the load growth has increased tremendously. That is, people requiring electricity. Nothing prevented the federal government and even entrepreneurs to come and invest in the coal industry, to bring back the power generation back again. We have not given it adequate attention. Not that the solid fuel is not here. The solid fuel is here. It's just having a proper plan to harvest the solid fuel to power the thermal power stations to supply us electricity.
Besides power generation and job creation, a former lecturer of the Department of Geology and Mining at the Enugu State University of Science and Technology enumerates the byproducts of coal and what it can be used for.
Now, you can use coal to produce light oil for aviation. You can use coal to produce fertilizer. Then, we have what you call the washery plant, where these coals are sent to be washed to meet the market standard. And the waste from that washery can be used in making ceramic, can use in making tiles and building materials. So there's so many things you can do with coal.
During the campaigns, President Bola Tinubu promised to revive the coal industry if he gets the chance to run the country.
We can build it all. We can turn our coal to industry.
Yes, we can.
To exceller.
Yes.
According to a public analyst, any promise to revive the coal industry is an empty promise except Nigeria exit certain protocols.
President Tinubu cannot be saying that they want to use coal because they signed the Kyoto Protocol. So it's either we exit from that Kyoto Protocol and say that we are no more signing, in fact, we withdraw from all the agreements we had, all the multilateral agreements we had on carbon emission. When we withdraw from that, we can use our God-given coal to produce our electricity, to fire our plants, to produce bitumen that we use for construction of road and so many more. So it is actually possible that we can exploit our coal. It will create jobs, it will create new markets, it will create foreign currency for us, it will foreign earner for us, it will attract FDIs, foreign direct investment for us, and to make the economy to boom a lot.
It further explains that if mining must be revived, it must be done in the most modern way with the welfare of the miners at the forefront to avoid a repeat of the November 18, 1949 incident when 21 miners were shot dead by the police while on an industrial action.
There should be modern training, policies that will involve modern training on coal exploitation, on coal mining, and then on coal, processing and usage. In that way, our more youths can enter and be able to, gain more from it. And then we should also, engender policies that protect people, especially coal miners, from the dangers or hazards of coal mining, because it's a very big hazard and has been a big issue.
Coal is a combustible organic rock composed mainly of carbon, hydrogen, and oxygen. As one of the most abundant energy resources in the world and given its role in providing affordable energy and alleviating energy poverty throughout the world, it is essential that the industry, the government, and the public work together to develop commercially viable technology pathways to zero emissions in a carbon-constrained world.
Well, talking about coal on the one hand and talking about nature, debt for nature swap on the other hand, we'll see what that means. President Bola Tinubu has once again spoken against a scenario where 90% of the country's revenue is spent on external debt service, and many development challenges are still facing the country. He said that this practice is not sustainable. Now, there's 3 billion. Remember, we just got that a couple of weeks ago, a loan for crude from Afrexim Bank. Of course, that's adding to the debt, whether we're paying with cash or with crude. So, some people are talking about debt for nature swap. It means financial transactions in which a portion of a developing nation's foreign debt is given in exchange for local investment in environmental conservation measures. You see? And we just talked about renewing our coal mining. Even the president promised that. Well, having that at the back of our mind, as the debt management officer said that Nigeria's total foreign debt for the period ending March the 31st, 2023 went up to 49.85 trillion naira from 46.25 trillion naira in December 2022. How do we manage all of this issue of debts, the president's determination to ensure that we don't use 90% of our revenue to service foreign debt, and then we also have the coal mining perhaps coming back on the one hand. We have Mr. Agu Ojowu. He's a senior consultant at the Africa Practice. He joins us from our Abuja studio. Thank you so much for your time this morning, Mr. Ojowu. Tell us, first of all, explain to a lot of us to understand this concept of debt for nature swap. What's it about?
Thank you, Edie, for having me. The debt for nature swap concept is basically an agreement where a debtor country and a creditor organization come to an agreement where a part of their debt is pretty much forgiven in exchange for commitments for investment in environmental remediation, nature conservation, investment in renewable energy, and the likes.
All right, so I guess you think that Nigeria could tap into this to deal with these huge debts that we have. I'm using about 90% of our revenue to service that. It doesn't sound sustainable.
Yes, absolutely right. It's not sustainable. We've spent about 90% of our revenues on debt servicing, and we've averaged that for about the past 3 years. And the debt for nature swap almost comes as a silver bullet. It's not an easy fix, but it's an opportunity that Nigeria can potentially leverage to address the debt challenges that we have and simultaneously address some of the nature concerns that we have. We have desertification in the north, where we are looking at financing for the Great Green Wall. So debt for nature is a potential solution in that space. We also have other environmental challenges that are facing different parts of Nigeria. We have flooding across the Benue and River Niger plains. We have flooding and oil pollution in the Niger Delta regions. And the debt for nature swap is an opportunity for us to access some of this financing that can be channeled towards ameliorating these environmental challenges that we have. The International Institute for Environment and Development estimates that about $100 billion would be generated from debt for nature swaps in the global south, which includes Nigeria and most parts of Southern Africa, Southern America as well.
So when you hear the promise of the president and even the reports we just played, where some individuals believe that Nigeria does have revenue to make and answers to some challenges by mining coal, does it worry you?
Yes, it worries me. I understand the plight of some of the coal miners, and I understand the plight of some of those that have benefited from the coal industry, but globally, the world is moving away from such heavy carbon emission fuels, and we are in a transition for which Nigeria developed its own energy transition plan. So we're in a process of transitioning from heavy carbon fuels to more low carbon fuels. We have an abundance of gas, which is our ideal transition fuel. We have an abundance of natural resources which can be leveraged for generating renewable energy. So I think the best way forward is for us to help some of these coal miners transition along the way. So some of the coal miners could also participate in the deployment of some of these newer low carbon energy sources, be it gas, be it renewable energy. So I think for now the world is moving away from coal, and I think Nigeria should follow suit as well, in line with our commitments to various agreements on reducing our carbon emissions and achieving net zero commitment by 2060.
Yeah, but some will argue that you still have big countries like the UK, Germany, you know, with the war in Ukraine, we saw a lot of them turn back to coal. And even some financial obligations that they were supposed to give to emerging economies have not been fulfilled.
Yeah, that's exactly right. Sometimes it's like what Nigerians say, that condition make crayfish bend. Those were almost forced reactions to situations, but right now the impact of climate change is hitting harder on sub-Saharan Africa. We have minimal capacity to deal with the impacts of climate change. The global north, the more developed countries, Europe, the United States, they have a wider buffer to deal with the impacts of climate change. But we saw the levels of flooding that we saw last year, and we saw the amount of lives and property that was lost. It was in billions. Nigeria doesn't have that amount of buffer to deal with the impacts of climate change the way these European countries are. So that's why they can still afford to go back. But right now, it's a case of survival for us. And we need to be able to bite the bullet now, chew the bitter medicine now, and make the right decisions so that going forward, we can have a more stable environment and deal with less negative impacts of climate change.
All right, so how would you suggest that the government, you have to convince President Bola Tinubu first, I mean, because he said it in his campaign that he was going to revive coal mining. But how do you convince him now, and what are some of the initial steps that could be taken if he decides to adopt this concept?
So I think it goes beyond just the president. I think it also goes to the voter populace, because President Tinubu is the president for all, and he's also concerned about the coal industry. But we need to make everyone understand, right from the elementary level of education, we need to have a climate awareness program. We used to have environmental studies. We need to bring that back for people to understand a life cycle analysis of climate change and its impact. If we decide to mine more coal, if we decide to have more carbon emissions in the air now, the impact of that, we need to understand the entire life cycle of it and know that this might not necessarily be the best way, and there are alternative ways. We have an abundance of gas. Majority of our gas reserves are still remain untapped. Those are alternatives that we can look at. What we just need to do is, as a friend of mine said, is this has to be inclusive and the long-term planning has to be airtight. So we need to ensure that we carry everyone along, show them what the long-term planning is, and that way I believe we can successfully get the buy-in of both the voters and President Tinubu as well.
Yeah, well, it looks like you have a lot of convincing to do to both the government and the people, but thank you so much for your time this morning, Mr. Agwojo, Senior Consultant at Africa Practice. All right, now let's move to the market and see how it closed last week and see if, well, did they mine coal there? Well, anyway, Willie Von works in now to tell us the details. Hi, Will. Good to see you.
Good morning, Nini. Yes, we do mine coal. Yeah,
Okay, you mine coal.
Yeah, like it's more like coal, the money, the black, the fiat.
The black.
Yeah, the paper coal. So we do mine that. So
is it black?
In terms of that, it turns white and then bluish
you
and
bleached
reddish.
it?
Yes, sort of with some,
All right.
ingredients.
I understand.
So we did see the FX reserves maintaining its downtrend last week. The COFA recorded another decline. Now, we're seeing data from the central bank showing that the gross reserves, not the net reserves, the gross reserves dropping by $66.24 million week on week to close at $33.74 billion as at August the 24th. Now, we're seeing also last week, we saw multinational financial services firm JP Morgan estimating our net reserves to have fallen to $3.7 billion as at the end of 2022. Now, that report has been described by the Central Bank of Nigeria, has been refuted by the Central Bank of Nigeria, calling it out as misleading and out of context. Now, we're seeing Forex trading. If we look at what happened at the FMDQ exchange last week, closing negative, down 32.61% to close at $417.9 million, while we see the FX spot market, that's the I&E window, down 33.44% to $412.13 million. We didn't see any activity for the futures space. The forwards, however, was up over 500% to $5.77 million. Now, if we look at the NAFEX, let's see how the exchange closed last week. We did see the NAFEX rate down against the dollar. The naira dropped further 0.07% to 772 naira 68 kobo against 772 naira 14 kobo we saw in the previous session. We continue. This decline has been on downtrend, especially since the NAFEX report came out, and we're just wondering how long, how far low the naira is going to drop. Now let's look at the fixed income market. We did see that bullish sentiment, that bullish close for the Treasury bills. The yields dropped in that segment. For the bonds market, we did see that bearish sentiment. Yield did tick up in that segment. But we're going to bring in Senator Aldo. He's a money market dealer, Access Bank, to give us insights as to what happened and to what to expect this week. Good morning, Senator. It's good to have you on the show.
Good morning, Willie Bog. Thanks for having me.
We were just starting off with JP Morgan's report on our reserves, $3.7 billion. How much influence did that have on trading in the I&E window? We did see that knee-jerk reaction at the parallel market, but we want to know how it influenced trading in the spot market.
Okay, so in the I&E market, the investors and exporters window, as you rightly said, the CBN was quick to address these concerns. We saw the director of the Monetary Policy Department come out to describe the report by JP Morgan as out of context and misleading. He did go on to simplify the explanation by saying that, like any other bank account, you should expect fluctuations, and taking these balances out of context could be quite misleading. So we didn't see a marked response in the I&E window. As you explained, the I&E rate, the NAFEX rate, closed around 770 naira levels last week, which wasn't a significant movement from how it opened at the start of the week. So we haven't seen any significant impact in the official market.
Hopefully we'll keep track of that, because it's still a developing story. We'll still see how markets will look ahead, especially with the Q2 numbers, the GDP numbers that came out, and not as appealing as people were expecting. But looking at yields in the fixed income space, is the market still riding, or investors still riding the high of the stop rate seen at the last primary market auction, which was at the 13.9% levels for the 1-year paper?
Okay, so at the auction, as rightly expected, we saw really high rates. We saw the 1-year close at 13.97%, an increase from about 9.8% at the previous auction. We saw a similar increase across the other two maturities on offer. But with the Treasury bills market, to see a sustained bullish sentiment, you need market liquidity, which is our core, according to INE. So we need a lot of liquidity in the market, but we saw that on Friday, the market closed in a repo of about 280 billion. A repo means that banks on a net basis were borrowing from the CBN. To give you context, on Monday, the figure was positive, about 23 billion. So we saw market liquidity go quite low, but the market began to trade towards the end of the week with expectations that FAC FAC has been approved, so we expect that liquidity to come into the market. So we started to see bullish sentiment across the long end. So the auction bill that closed at 13.97 traded at under 12% on Friday, and we expect that bullish sentiment to intensify this week. Although we haven't started to see those FAC inflows actually come in, market participants are already trading with that sentiment. On the bond side, given that there are longer-term maturities, we are not seeing that reaction quite yet because the bond market is slightly bearish. It is ranging from quiet to bearish, as we've seen all the bonds, all on the run bonds trade slightly higher at where they closed at the primary market auction 2 weeks ago.
The rate you've just mentioned now is still below inflation levels, which is currently at 24.08%. That's not enough for investors to be able to make enough return on investment. Looking at just comparing with the equities market, year to date, we're up 27% as of the last print. How do you expect investors to match this? Do you think we'll see that flow from the fixed income to the equities market, because people want real returns and people want to beat inflation? Do you see the markets, skewing towards the equities space?
So as we've seen investor behavior, we see investors, I mean, there will be some demand in the equities market, but we've seen that there's some, there are some peculiarities between the investors who are in the equities market and those who are in the fixed income market. As rightly said, the inflation rate is still far above where the inflation figures are far ahead where the secondary market fixed income rates are. So the reaction to that is that we would see market players demand a higher rate from the DMO, which is what we saw at the previous auction. We don't expect that to be a one-off occurrence. We saw that happen at the last OMO auction and at the last NTB auction. So we expect that at subsequent auctions, fixed income auctions, we'll see market participants demand higher rates for the money that they deposit or lend the CBN or the Ministry of Finance. So we expect a higher rates at next auctions. We expect an auction on Wednesday next week, and we expect that market participants should demand a higher rate at that auction.
Is the DMO willing to give the higher rate, saying that they also want to cap, interest rates in terms of the loan and their debt repayment? They don't want to pay higher. So do you see them, yielding to investors or market players' demands?
We expect the DMO the behavior of the DMO in relation to treasury bills has been to allot exactly what they offer. So we don't expect a shift in that behavior or in that trend. So we do expect that it will largely be demand driven. So they would have to take money at the rates that investors are demanding, as far as is within the offer that they have put out. We might, however, see events in the secondary markets push those rates down. So as I explained, FAC, the approved amount is about 966 billion. So those increase when we see market liquidity at those levels. What happens is that those funds go into the secondary market and drive rates down. So if we do see rates go down, my speculation would be that it would be as a result of increased market liquidity rather than any action by the DMO.
Thank you so much, Senator Aldo, Money Markets Dealer at Access Bank, for sharing your insights on the program. So we're seeing the markets closing for equities up 1.29%, settling still at the 65,000 level. Market cap still at 35 trillion naira mark. We're seeing look at the top trades yesterday. It was mixed sentiment. 1.81 billion traded, valued 29.3 billion naira, and all transacted in over 31,000 deals. So the market is really up, except for the NASD unlisted market, which was down 0.22% as of last week. We're hoping to see if there's going to be more shake-up. Haraldale Holdings, as Niger Delta Exploration and Production Company, has been keeping the market up, but we see that down. But right now, they're not there right now. So
well, profit taking is off. All right, Will, thank you. See you at 1:30. All right, so let's go to the crypto market just before the program comes to an end. And we see that it was a bloody weekend. It was not friendly at all. If we're expecting a miracle, unfortunately, we did not get that miracle. So we see that Bitcoin has dropped even further, is now at 25,967.19. I wonder what people were doing over the weekend. Ethereum is also down 0.47%. We have a mixture of colors here, but we can see that the color of the day is red. Let's look at the index. There you have it. It's still fair. The very fearful investors we have in the crypto space these days are 39 points. Looking at the numbers now, we already have an idea of what Bitcoin looks like at 25,967. Ethereum is also down. BNB gained a little bit, and Cardano and XRP are down, especially XRP there, 1.61%. Let's have Rumi Ofi now join us to share his thoughts on the market, what was happening all through the weekend that give us a very bloodier Bitcoin this morning. Hi, Rumi, good morning.
I know you believe in miracles, but I don't.
You don't? Okay. Is that why? I mean, is it? I just want to understand. I know it's a bear market. I've accepted that fate for almost a month now. But is it that people keep taking profits, or is it inactivity that keeps the market, still dropping?
The truth is, there's been a very solid fundamental growth in crypto, but it's quite slow for a while now. We see the price, the Bitcoin market is about 62% down compared to previous peaks. It's safe to say people are collecting profit, but people are not sure. A lot of them are not sure concerning what happened from 2022, where we had Terra Luna crash, FTX, and a couple of other companies going under. So it has brought this awareness to regulation that, see, guys, we have to take this industry really seriously, and those are actually making investors to be a bit scared. But on the other side, there's some very good news that actually came out. With the biggest asset management company, BlackRock, putting interest that, we're going to get into Bitcoin. We're going to invest in companies that are involved in mining, and we're also going to apply for Bitcoin spot ETF. So these are very fundamental things that people need to pay attention to. But on a short term, so it is very important that people don't look at this industry on a short term. This is why I will love a situation whereby we solidify our regulations in Nigeria so that we can take the best opportunity in mining and all the other parts of the industry really seriously, because as it is now, we have one of the youngest population in the world. So looking at it from both sides, in the developed world, people are looking at, short term, we'll take money, and later we're going to involve ourselves. So we on this part should involve in education, in having the skill, and making sure we're best positioned so that when the opportunities come, even in the West, we can take opportunities from there.
So, Rume, just very briefly now, where is Elon Musk when you need him, or X is keeping him so busy? He can do something to the market.
Yes, Elon Musk can do something to the market, but the way it is now, the market is quite bigger than Elon Musk right now. What I mean is quite bigger than Elon Musk. He's focused on doing other things. The crypto market is a young asset market. He can influence a couple of things, but I wouldn't want to say that Elon Musk, there's a narrative. That narrative of Elon Musk has actually expired. So now we're looking at the biggest asset manager now, talking about BlackRock. I don't think Elon Musk can match that. So that's the new narrative and other things that are going to fall in the future.
All right, Ruby, you know Elon Musk, he has some words and then he just tweets something and something happens. But anyway, this is our fate for now. It's a bear market, so we'll endure it for as long as it lasts. But thank you so much for your thoughts this morning, financial analyst Rume Ofi.
Thank you very much, Ini. It's going to be a bit bumpy ride, but we'll survive.
We'll survive. All right, so that's it on the program with the crypto in the red. I don't know if it will improve tomorrow, but from analysts, it doesn't sound like it. But that's it on the program this Monday morning at 1:30. Willie Bong will be back to give you updates from the world of business. I'll see you at 10 p.m. for the stock market report. I do hope to report a bull market. Hopefully, the investors at the NGX will not behave the same way with crypto. All right, but Willie Bong will be back 1:30. I'll see you tomorrow morning. I'll see you at 10 p.m. first, and then I'll see you tomorrow morning. Bye.